Hello, everyone. Welcome to Silicon Dragon, Hong Kong 2021. We're here again. So I really appreciate you signing on. We have a full house tonight and a great lineup of speakers. I'd like to thank everyone who did attend and help to sponsor this program, either through your Circle membership or through other means. So thank you, KPMG. Thank you, our partner, Cyberport. Thank you, Invest Hong Kong, who has been with us for many events, including our Ask a VC series, which we started when COVID started. And we've had about 40 VCs on globally. So it's been a really great program. So a little bit about Silicon Dragon Ventures. I started it in 2010. It seems like a lifetime ago. And since then, I've also published 3 books. Actually, the first one was 2008. I have a new one coming up, which I'll be able to tell you more about soon, but that's a photo from it right here. So next, I want to let you know a little bit about our program coming up. We have a keynote from John Chambers, Chairman Emeritus of Cisco. He's now a venture capitalist with JC2 Ventures. He's in Silicon Valley. And we have a spotlight interview with him. Then we have a Ask a VC spotlight on William Balbine of SOSV. He's now in Shanghai, but he splits his time between Shanghai, Taipei, Silicon Valley. So William will be joining us. We also have a debate, a panel debate. This is on the best Asian tech hub. It's based partly on a KPMG survey of executives around the world on best Asian tech hub and many other factors as well. So this year, Singapore came out ahead, and we'll get to hear more about that from our panelists who will be debating that particular finding. And it's going to be really interesting, I think. So now what I would like to do is stop this share. You can see the friendly face of John Chambers here. He's originally from West Virginia, so I'm sure you'll recognize a little bit of a twang there. I also have it because I'm from the same neck of the woods as he is. But anyhow, I think you're going to enjoy this. John has a lot of lessons for entrepreneurs here. He's had just a stellar career running Cisco. He's worked all over the world, China, India, and I can't think of anyone better than John Chambers to lead us into our session for this evening. So just give us a moment and we'll bring John right up.
I'll share with you today my thoughts. If you agree with everything, I failed. I haven't got you uncomfortable enough. Kind of sharing with you both successes, but also mistakes I made over my career. Because for those of you listening, the mistakes or how you deal with crisis may be as important as the advice on successes today. So let's have fun, and I'll try not to let you down, Rebecca.
Oh, good. Well, you haven't yet, and I doubt you will now either. So, John, tell us where are you placing your bets today? You're now a venture capitalist with JC2 Ventures. Where are you placing your bets today in the tech world by sector and also by geography?
So a series of questions. Let me take them in the sequence you did, and also starting with teaching moment. Henry Kissinger, who is a very, very good friend, he taught me how to plan out your discussions, the scenarios you do, et cetera. Always start with the big picture and then bring it back to the specific area we're focused on. The big picture is every country, every company is going to go digital. And the concept of where 20 years ago, I said that every company becomes a tech company, and in 2011, every company becomes a digital company, is now finally happening with tremendous speed. That means that the opportunities for startups around the world are going to be almost unlimited over the next decade plus. And so where am I placing my bets? I pick out my startups that I bet on, and I have 20 that I bet on. It's all my own personal investment, a relatively small fund. But out of the 20, we have 6 unicorns already. We have 6 that will probably be unicorns in the next 18 months. 2 or 3 others will fail, and I think 2 or 3 others will eventually become unicorns, and then we'll focus on the next decacorn group out of the portfolio. Where I'm betting, I start with a market in transition and a new technology. So in old world terms, Cisco terms, it's the internet and Amazon betting on it changing retail. Then I bet on the CEO. Then I'm mainly a business to business person. So when I talk to a young startup about, do I invest in them or coach them, first question I ask is, who are your customers? And then I go talk to the customers. And usually I'll know the players on a global basis. And I'll ask them, what do you think about the company? Is it really important? Is it differentiated? How comfortable are you with them being a leader? Then I see if they have a chance to be 1 or 2 in their product category, and I don't invest unless they do, just like I did at Cisco, where 16 out of 18 of our product areas were 1 or 2, either through internal development, partnering, or acquiring. Then I try to see how close they are to the inflection point, ideally 1 to 2 years out. So what are the technology areas I'm betting? I'm betting very heavy in AI. If I look at the major technology trends over the last 30 years, clearly the internet, then I'd argue the cloud. I think AI will be the next one. Now, AI will be accelerated through areas such as the Internet of Things, digitization, 5G, et cetera, cloud moving to the edge. But that's the first bet I make. The second is cybersecurity. If you want job security for yourself, for your kids, major in AI and major in cybersecurity. Those are going to be the top issues, I think, for the next decade. The globe is set up for a major cybersecurity player. It is not consolidated yet. Hopefully, if I do my job right, one of my companies will emerge into that cybersecurity consolidator type approach. The third thing I'm betting on is the cloud has traditionally been the big thing that you put up in the air. If you watch the transitions that are occurring now, the action will move to the edge. As it moves to the edge, that's where 70% of the data will be processed. Most of it will never come back quote, to a big central cloud. Think of self-driving cars, branch banks, et cetera, within that. It's going to be an opportunity for new challengers and perhaps somebody to really challenge or democratize Amazon in terms of giving people a choice to be able to compete on scale and price points they wouldn't be able to do otherwise. I love the concept of Internet of Things. And as you go from when Cisco started, 1,000 things connected to the internet to 500 billion by the end of this next decade, probably before then, that changes a lot of things on business models, supply chains, and many other categories. So those are where I'm placing my bets. Those are the transitions I'm betting on. And this is how I see the industry evolving. Geography-wise, this is one for you all in the audience. It used to be, and remember, I'm a product of Boston 128. Most of you are too young to remember when they were the high-tech center of the world. I was at Wang Laboratories. Dr. Ian Wang was the most brilliant man I've ever met in my life. And I loved my time with him. I was actually his tennis partner as well. And we were the dominant mini computer player. But because we didn't change, we got left behind. And I would argue Boston 128, which I'm literally speaking at in a week to their venture capital world and to the universities, they got left behind because they failed to capture the transitions. They competed about their current companies evolving, i.e. mini computers, and they displaced the IBMs, the mainframes of the world. They didn't see client server and the internet coming, and Silicon Valley did. And we looked at the people out in Silicon Valley and said, they're kind of unusual. And they're a little bit on the edge, and we didn't view them as real competitors, and boy, were we wrong. Silicon Valley for the last 2 decades has been the place to be. Tremendous excitement, tremendous growth. 65% of the venture capital in the world used to go into Silicon Valley. Now you're seeing venture capital go globally. And that's one of the fundamental changes. You now are just as likely to have a great startup in Hong Kong or Delhi or Bangalore or Paris or Texas or Miami as you are in Silicon Valley. And Silicon Valley, if it's not careful, is absolutely losing its edge. So I think what has changed is startups are going globally. They're going to do this with tremendous speed. There's been more money available in the market than I've ever seen in my life, both traditional funds, VCs, private equity, top 25 private equity firms in the world have 500 billion on cash on the sidelines, and they're going to try to move into growth and high tech on it. The speed of innovation, you can disrupt at a quicker pace than I've ever seen before. And you're seeing small companies acquire earlier and move into market adjacencies earlier, which would not have been my playbook, Rebecca, when I wrote my own book, Connecting the Dots, a couple of years ago. But today it is with my startups. Half of them are already acquiring and going into market adjacencies. So that is probably a 2-hour lecture in hopefully 5 minutes to start our conversation.
Well, it's interesting that you say that you don't think Silicon Valley really has the edge that it used to have, that there are many Silicon Valleys today. So what Silicon Valleys do you see globally as the main contenders?
Yeah, and I'm not saying there are many today, but there will be.
There will be. I see.
So what happens is that startups love to be around great universities and universities who teach startups. And so in Boston, it was clearly MIT.
Yeah.
And out of the first 100 companies I bought at Cisco, probably 20 of them were an outgrowth of MIT. But because they didn't change, and the companies, the mini computer companies around Route 128 didn't change, it went to Silicon Valley. The engine out here is very candidly at Stanford. And even though the kids at Berkeley are equally as smart and 7 times more, 9 out of 10 companies I buy in the Valley are not growth directly or indirectly of Stanford. They teach it in their schools, entrepreneurship. John Hennessy, the CEO, prior CEO there, president there, did an amazing job of this. And probably 40% of my companies that I bought were directly or indirectly an outgrowth of Stanford. Now you're seeing this occur in areas around the world. Polytechnique in France, and I'm the French high-tech ambassador, and I lectured there with both Macron when he was economic minister before he became president, and also with La Durant, the defense minister, at the business schools and stuff. And we outlined a vision for France becoming a startup nation. And for those of you in various countries around the world that think, how quickly can this occur? France used to be the worst place in the world to do business, and well, not in the world, in Europe to do business and invest headcount, and now it's the best. But we outlined a vision, and Macron is the champion of this, about a startup France, an innovative France, it being the lead for Europe, and their startups have increased 5 times over the last 5 years, 5x. I'm there each year giving out the Unicorn Awards of the future to the French organizations. You watch the great universities in China. You watch the hubs of startups built up around them. The IITs in India, they used to generate 1 or 2 startups a year back 10 or 12 years ago. And I bought, interesting enough, I've invested in 2 of those out of the early startups. Now they generate almost 100 per year. And so you're going to see this go global. University of Texas, Austin is really cranking it out very rapidly. You're seeing more and more schools, even my home state of West Virginia, is redoing their whole curriculum at West Virginia University to be entrepreneur and require that for everybody to be taught. In a startup state, learning from the IITs, learning from Polytechnique, learning from Stanford in terms of the future. So is it going to get global? Absolutely. Is the pace of change going to be exciting? You betcha it will.
Okay. Where do you think India is on the curve? Because I know you've worked a lot with India.
Well, I can draw a parallel, and I always like to draw the parallels first. I bet big time is one of my first decisions at Cisco on China. And I love the vision of where China was going. Jiang Zemin happened to be Dr. An Wang's classmate, so I had an advantage in getting to know him. I did the first joint venture partnership in China when I was at Wang Laboratories. And you could see the universities and the hunger of the young people to develop startups, very much sponsored by government. So I knew they would emerge into a major power. And when I became CEO, my first big bet as CEO, now I bet on startups and acquisitions earlier at Cisco, before I became CEO, my first big bet was to bet on China. So India is where China was 20 years ago. Okay. And if you're going to bet on one geographic startup area in Asia, I would bet on India at this time. And I think if they do it right, you will see their acceleration occur rapidly. Unicorns, which in and of themselves is just a metrics, but unicorns, when you get to unicorn size, $1 billion valuation, you're about to add a lot of your headcount. And your headcount only grows after you become a unicorn or IPO in a big way. That's when you add 90% of your headcount. So I track the number of unicorns and the rate of unicorns. China, for example, has about 300 today, and the numbers vary depending on what source you use. They've added about 100 so far year to date. The US has over 400, added 200 year to date, interestingly enough. India was very steady at 8 or 9 or 10 unicorns a year. This year, they've already added 31. And then what you want to do is track these through to decacons in terms of horns, in terms of the marketplace. So that's what I see occurring. France, which started 5 years ago on making this transition, they are growing their unicorns year over year at 100% and 5x increase in 5 years.
Is it too much capital chasing the innovation that's out there?
Well, if I were one of the young VCs, I would say there's never, I'm sorry, one of the young startups listening to this, I'd say we want more capital.
Yeah.
There's more capital available in the market, Rebecca, where you're leading me than I've ever seen in my life.
Yeah.
And that means some deals are going to get funded that probably never should. But this is why I believe in portfolio management. I'm not a PE guy. Private equity focuses on everyone being very successful. They really get heavily involved in the companies they put resources into, help you run the company literally on it. I'm more of a venture capitalist, strategic partner that bets on trends and bets on people. And I expect a third of my acquisitions at Cisco to fail. And I told the market that they would, and they did. And yet we were the most successful acquirer in all of high tech. And I think everybody would give us that. Same thing with my venture world. If at least a third of my ventures don't disappoint, I did not take enough risk. And so, yes, the more capital available, the more failures they're going to be, but the more successes. And it's not a perfect world, but boy, it's relatively flat, using a Tom Friedman term, in terms of global startups and global money starting to occur on it. The money's going to go wherever there's predictability and investment policy. If somebody's country doesn't have predictability and investment policy, the money will go somewhere else. The VCs will see that, the investors will see it, et cetera.
Right. So what is the success and failure rate? What accounts for successes and failures among entrepreneurs? From your experience, is there a single ingredient or several ingredients? What stands out in your mind as like the biggest challenge that they face?
Well, this is kind of fun. If I were to talk to the VCs listening to this, the only correlation when I talk to the top VCs in Silicon Valley, and these are the ones that are on their 7th, 15th fund on it, that is predictable, is the CEO that they bet on when they invested was the one that exited with. So picking a great CEO is probably the talent, the common ingredient. I put in front of that, as I alluded earlier, you don't compete against a competitor. Say I'm coming in and I'm going to compete against Amazon or TikTok or whatever company you want to pick. You want to say, what is the new market transition going on and how am I going to do it differently? So if I were to ever talk to one of your companies listening to this and they would say, John, I'd like you to invest, I'd say, tell me your market transition. Tell me what new technology you're doing and what's your sustainable differentiation. Then I listen to you as a CEO, how good you are on vision, how much you'd want to be coached, and are you somebody I want to bet on? And I look probably at 100 companies for each one I invest on. And then I like being customer driven. There was only one Steve Jobs. Somehow he just knew what to build. Still took him 7 years. I tend to go straight to customers and say, what do you think of this idea? Here's the transition. Here's the company. Would you bet on them? And so those are the things that I look for. Common ingredients, mistakes that each of the young entrepreneurs will make, they're remarkably predictable. It's a hard one because I'm not a tough guy. I have very high expectations. I've never raised my voice ever in business. And but expectations are high. The mistake that I would make is when somebody was working hard, they were with me from early on. They are very good people and they just can't do their job at the level they are now. I stuck with them too long. And I should have addressed it earlier and got them in the job they can do. And this is something that most entrepreneurs make, most of you listening will make. And it becomes not their problem, it becomes your problem over time because your leadership team sees that you're not stepping up to an issue. Other mistakes, if you're an engineering background, which many of the people listening to this probably are, you're going to say, I'm brilliant in engineering, Therefore, guess what? I can be brilliant in finance and sales. And engineering leads inevitably mess up almost without exception their first chief revenue officer. They pick somebody that talks like an engineer, thinks like an engineer, who's more of a business development person, and that's not what a sales lead is. For those of you who are sales leads or a business background, you'll mess up probably your first engineering major choice because you're going to want somebody that can re-articulate the vision and engineering and direction well. There are a few world-class engineers who do that, but most of them are just really good technologists. And so you are the person who's more of a product marketing person than an engineering lead. So common mistakes you should watch for.
Right. So very interesting. So what about in your own experience as leader of this gigantic company, Cisco? Any lessons that you can share from that experience? Did you like, what was your biggest mistake or something like that?
Well, there are a huge number of lessons, and I alluded earlier, I've seen every movie at least 2 or 3 times, and I've made every mistake there is before on it. And I don't think anybody would argue with our success rate in terms of leading our industry and leading our industry in the market segment by the largest amount maybe anybody had done to that time, and the most valuable company in the world at one point in time. And
so let me ask you a related question about that,
Sure.
because today in the news, there's a lot of discussion about big tech and whether big tech is too big. What's your opinion on that?
Okay, so let me answer that question, then I'll go back to your other one. I don't think it's a question of size. And if you look at issues on antitrust or regulation, it's how do you use your power, and do you listen to the legitimate concerns of society and the government? At Cisco, we never had an issue over 20 years. We operated very effectively in every major country in the world, gave back in every country in the world. We were the most trusted partners of our customers, our partners, and governments. And it didn't matter if you were in France or Russia or China or India or the US. We worked with the regulators, treated everybody the same on it, and never had any issues. And as I exited Cisco, tech was still viewed by the majority of Americans as good for America and good for the world. That is no longer the same scenario, both by government leaders around the world and by society. And so I think tech has to be very careful here to get back to getting the economic returns and the good financial growth, but having an equal commitment to benefit for society. And they actually aren't contrary goals. They go together. So for you young startups, I encourage you to do that. And when governments have legitimate concerns, you have to listen to them and understand what the issues are and say, can we work through this in a win-win type of fashion? Do I think regulation is coming on big tech? Yes, I do. I think anti-monopolistic behavior is coming and suits on that? Yes, I do. And it could have been avoided. Both leaders of both political parties asked big tech to change, and the large companies did not. And they said, we're going to regulate if you don't. And they know they're not going to do it well. But unfortunately, that is coming. And I think it's going to vary by company. But I think big tech is under pressure, and part of it is self-inflicted.
Okay, very interesting. So let me get to my last question here as we wrap up.
Okay.
Now, what is your view, since we have many from Hong Kong on this program, what's your view of Hong Kong innovation and mainland China innovation? Any remarks out there for those entrepreneurs?
Sure. So obviously, I'm very biased toward the China region. You know, Dr. An Wang, I was literally almost part of his family. I've said, and I believe that if I weren't American, I would love to be Chinese because of the opportunity in front of them and their ability to dream. And for 20 years, I never had anybody break my word to me in China. Commitments made to me, tough negotiators, but they delivered. And even when we had issues on intellectual property, we solved them. And once the commitment was made to me, it wouldn't occur again. It didn't occur again with the companies involved. And so I'm an optimist on China. It's clearly going to be the economic leader of the world. The concerns I have are very simple. As an investor and as a job creator, remember, almost all jobs won't come from big companies in the future. Automation, digitization is going to be so effective that big companies in total will not add additional headcount. So If you're trying to create jobs, change standard of living, you've got to have a unbelievably vibrant startup community. And so investment goes and talent goes, it can move around the world. People move around the world, currency absolutely does. So governments have to be predictable in their regulation. When you invest in a startup, even the hot ones that get to be a unicorn in 5 to 8 years, it's 5 to 8 years. You've got to have a predictable policy. You can't worry about your intellectual property being stolen. You can't worry about dramatic government changes, which suddenly make your investment a bad decision. So predictability is key. If I look, China had that predictability in the 90s and early 2000s. India candidly has that predictability now. So if I had to bet on one country in Asia at this time on economic growth, startups, predictability, I would unfortunately, even though I know your audience is focused in Hong Kong and China, I think India candidly is learning a lot from what China did very well, and they're addressing the startup community with tremendous speed.
Yeah, no, that's great. And I know you have 2 startups in India that you've invested in as well.
Yeah, one of them is just becoming a unicorn and perhaps the leader in AI. And the other one is in cybersecurity with a young, used to be 28 years old, 32-year-old. So what you're seeing with Unifor and led by Umesh, he's amazing. He will not only be a multi-unicorn here within the next year and a half, he will be one of my first ones to become a decacorn. And then Saket Modi with Safe Securities, unbelievable, vibrant, again, a growth out of the IITs, just like Umesh was, and a dreamer. And I'd watch him. I think he'll be a unicorn status quicker than people think. Could they trip? Absolutely. And that's part of the venture world and the startup world. Last thought.
That's what makes it fun, right?
It is. Last thoughts, if I may.
Yes, go ahead.
I want to challenge the audience. I think many people think, and the young people in particular and startups are dreaming too much and too big. I'm the reverse of that. Shimon Peres, the late president of Israel, taught me there is no room for small dreams. I want you to dream big. I want this to be a phenomenon that raises all countries, all jobs around the world, and does so in a way that changes standard of living, benefit to society. But I'm also going to ask you very strongly, don't just look at the economic return. If you don't give back to society, government will regulate you. First, it's the right thing to do. And secondly, if they don't see you doing this, it's going to be a tough headwinds that you will face. And they aren't opposite. Every country in the world where I was number one in corporate social responsibility, and I went everywhere from China, India, Europe, Middle East, etc. We were number one in profitability. I actually think benefit economically and benefit to society go hand in hand. I challenge you all to dream bigger, and I challenge you also to give back as you're successful.
Well, I think you'll have to agree that John Chambers is one lightning rod person who has wonderful insights to share for venture capitalists and for startups around the world. And it was very interesting to hear his views about China and India, and to hear his perspective from a global perspective, not only as a venture capitalist today, but also as running that huge giant company, Cisco, around the world. So thank you so much for listening to John. And now I would like to bring on William Balbeen to our stage here. So hello, William, how are you?
Hi, how are you doing?
Good, good. So you're in Shanghai today?
Yeah, I'm in Shanghai. I'm still traveling in the age of COVID. It's not the easiest thing in the world, but so far so good.
Okay,
Yeah.
you just went through quarantine, didn't you? I think you were in
like three months ago. Yeah, I'm trying to stay out of quarantine. Well, I do about a month a year in quarantine. That's good enough.
Yeah, you learned to do some cooking in the room there.
Yeah, well, I think that's a bit of a secret, but I bring my kitchen with me to the quarantine, and one thing that really helps is cooking my own food while I'm there. I promise it's completely safe.
Well, I was following you on Facebook and I saw some of the things that you were eating. So anyhow, it was enlightening, to use a kind word. No. Anyhow, William is here from SOSV and Chinaccelerator. As you know, SOSV is one of the most active venture capitalists in Asia and even the world. William has been with SOSV now. How many years, William?
Over 7 years now. Yeah, so far so good.
Now. Okay. So as many of you know, we had Sean O'Sullivan, the SOSV founder, on our program earlier on for our Ask a VC session. So I'm really happy to have William on now to tell us more about what the strategy is for Asia and particularly China, because there's been so many changes with China regulations and tech innovation and US-China. So I'd like to hear a little bit more about how William is managing to navigate all of these changes and leverage it all. So William, tell us a little bit, give us an intro about SOSV in China and how you're changing your strategy today.
Sure. Well, we're early stage venture capitalists. We focus on hard tech or deep tech, or some people in the MIT call it tough tech. We are the most active early stage investor in the world, and I think now the #2 most active VC in the world. We are truly global. So most VCs focus on investing in innovation. We're actually trying to innovate the VC model. So all of our partners invest globally all around the world. We're multiple verticals within one fund, hardware with our HACS program, IndieBio for biotech, and I run cross-border internet with Chinaccelerator and Mox, focus on cross-border. We invest, and then we help the companies that we invest in through our programs, and then we continue to follow on. We used to run accelerators, but now our programs never end. We continue to support the companies that we work with for the lifetime of the investments. We have over 1,000 portfolio companies now, and we just had our climate summit, so it was great to see. We are the most active investor in climate tech in the world, according to, I think, CB Insights. I did 68 deals this year. And we have our Climate 100, so SOSV Climate 100, go check it out. They're the 100 of the 140 plus climate tech companies that we've invested in. So for China and for Asia, we started the first accelerator 11 and a half years ago in China, first in Asia, and we're the first and only active accelerator in Asia to have a unicorn go through the program. Our focus has changed over the years. I'd say for the early years, we were just looking to find young entrepreneurs that we could help. And then when I joined 7 years ago, we focused on cross-border market entry, so helping companies from around the world enter China. Starting 4 years ago, we actually diversified out of China pretty significantly. We reduced our investment in the market by about 80%. So from about, it used to be 100% of our companies in cross-border internet exposure to China, down to 50, and then down to 10%.
Okay, why did you do that? Let me stop you right there and just get a question.
Yeah. So
why did you do that in the timing 4 years ago?
Well, I think one of the main reasons was that there was a significant lack of competition in China, especially on the consumer side, and enterprise was just taking off. So for China, we've been focused on enterprise and SaaS. For the last 4 years, we are early stage, and enterprise and SaaS is taking off now, so that's great. But consumer became increasingly difficult because Alibaba and Tencent were in kind of a duopoly situation. It wasn't that they were there by themselves, but they got so powerful that you either took money and support from Alibaba, or you took money and support from Tencent. But if you took support and money from one, it was basically impossible to work with the other. So you got, very similar kind of like big internet situation that you saw in Europe and in the US. And so this duopoly environment made it very difficult to compete. So we basically just decided to not focus on China consumer. We still have some bets from earlier on that are doing quite well. We have one company getting ready to IPO, hopefully Ushapa, but it was just quite difficult to continue to do early stage in consumer in China. And you had firms like
That
Sequoia
was
China.
mainland China.
There's
That was
like,
mainland, William, that was mainland.
yeah,
China,
mainland.
Not Hong Kong.
Well, mainland China, but we don't really. I mean, Hong Kong is has some great entrepreneurs, but it's a very small market.
Right.
Yeah.
So then where did
And this came out. Yeah. So first we started with Southeast Asia. SOSV is now the number 7 most active VC in Southeast Asia, number 6 most active in Singapore with 46 investments. And then starting 3 years ago, took a very, very heavy bet on India, where we're the number 6 most active VC now. And then over the last year and a half, actually making pretty aggressive bet in Pakistan, where we have 7 investments in the last year and a half. And Magnet just named us again, like number 2 or number 3 most active VC in Pakistan. We're now entering Bangladesh and just did my for cross-border and our first 6 investments in Africa, especially focused on Egypt and mostly sub-Saharan Africa. And the model is we're trying to change up the model, right? We're bringing what we learned from the China market out. So one of the most successful companies around the world to come out of China is Xiaomi, Me. And back in 2005, 2006, I worked on the Kingsoft Jinshan IPO, and the head of engineering there was Lei Jun, who went on to found Xiaomi. And they had a great model, which, as you do, I tried to copy. Unfortunately, I didn't have $2 billion in venture funding to start my own handset brand. So what we've been doing for the last 6 years with our Mox consumer platform is trying to clone that model, but by partnering with large corporates who are under pressure from big internet. So for example, shopping malls are under pressure from e-commerce. Banks are under pressure from fintechs like Ant Financial. And then you have these telcos that are under pressure from everybody. They're turning into dumb pipes. So we partner with these companies, and they have users and they have trust. And we have amazing consumer internet services, which nobody is investing in right now because it costs tons of money in advertising on Google and Facebook to get a user outside of China. And so they have negative unit economics. And we've tried to bring the two together in a partnership. So the enemy of your enemy is your friend. And so now the difficulty was getting these large corporates to actually give us these partnerships. And what we're asking of our corporate partners is to give us free advertising to their users, almost like the old telco wireless fast model or the Xiaomi model. So Xiaomi doesn't make any money on the phones. Most people don't understand this. They're not a hardware company, although they make great hardware. They basically are a platform to get into the user with hardware at a 0 or maybe 1 or 2% gross margin. And then they make revenue share on the services on the phone. They're making upwards of $200 to $300 in net revenue share to Xiaomi from the services for every phone that they sell. And we're trying to basically follow that model. And in fact, we have Mox apps and services that are factory pre-installed on Xiaomi. We're partnered with Samsung, and now we're working with telcos like in India, like Reliance Jio. So yeah, that's
Like you said,
how we've expanded out.
Yeah, you're innovating the VC accelerator model there. But tell us more.
Well,
so you really downplayed your China investments and in the consumer area, and you went to Southeast Asia. And
Southeast Asia, South Asia, Middle East, North Africa, now Sub-Saharan Africa, and now South America and Latin America.
Okay, but now you're starting to circle back to China. So why is that? Because you're really running counter to the trend. I mean, why in the world would you do that in this kind of environment? Okay.
Sorry, a bit of a
interrupted by
bit of a sneezing fit here. Yeah, so I think the interesting thing that's happening in China is you've got regulatory action. Now there's actually 5 different areas of regulatory action, and I'm not going to go into all 5, but the big one is that there's been a very rapid crackdown on Alibaba and Tencent, with the goal of breaking their hold. So the biggest change that you can see is that if you're in Ali camp, now you can engage with Tencent, and if you're in Tencent camp, now you can engage with Ali, and if you're Baidu, now you can actually engage it, and Baidu for the first time is able to crawl the entire internet within China, including things like TikTok, ByteDance, Douyin, right? So things are now a lot more open, and we believe that as early stage investors creates opportunities. So while later stage public market investors, and I used to be a stock analyst, the top ranked internet analyst in Asia, long time ago in the early days before Alibaba even went public.
I think I met you during those days.
Yeah, of course. And so there's now, I would say, hopefully, a opportunity driven by increased competition and openness in China. So China used to be an extremely open market, much more open to the US, and then actually China became a 2-horse race, right? There's Alibaba and Tencent. There are a couple others in there, but you could it's basically a 2-horse race. And what we're thinking is that there's a potential for things to open up a bit more on the consumer internet side. And most of China is not focused on, the Chinese VCs are not focused on consumer and internet right now. So, for our fund, we're less than 10% China, and for cross-border internet, we've been about 10% of the investments I do, maybe like 4 or 5 a year, right? And we're looking at maybe increasing that by 50 or 100% from 4 to maybe 6 or 7 a year, because and especially around the consumer side, because we think that there's a potential here for things to open up. And as we're very early stage investors, we're looking to potentially increase our exposure after taking it down 80%.
Are you seeing more innovation today out of China at this early stage than before because of these tech titans are being kind of shaken up, and it's, like you said, it's more open now again? More. Well,
I would say there's always been innovation here. It just didn't have an outlet because you had monopolies strangling innovation, strangling growth, strangling economic growth. And that's probably one of the reasons why there was a crackdown on big internet here, because when you don't have competition, you don't get innovation, and without innovation, you don't get growth. And that's why a lot of the entrepreneurs were focused on, Chinese entrepreneurs were actually focused on going out of China. So one of the areas that's really interesting here is that, China, there's always this debate, who's ahead in AI. I think it's kind of sort of a foolish debate, but the interesting thing about AI in China is that people use it, right? Mm-hmm. And so if you're not using AI to make your systems and processes more efficient, to do personalization for your customers or consumers, then you're not competitive here. So we recently invested in a Chinese AI company called Zemo. And again, we're focused on cross-border internet. So this is a company with 1.2 million users in China. And what they do is they automatically enable people to translate, natural language processing, translate what people are saying on video, like ours, except not just ours, because they're really good at high noise environments. So the video, if there's a lot of like interference or high noise in the background, they can still do the translation. And then they also do subtitling automatically into 15 languages, right? Wow. So there's lots of content creators all around the world that are pumping out content, putting it on TikTok, putting it, on YouTube. Even corporations are making tons of content that they want to go out to all their users or customers or even employees around the world. and they
Right.
want to efficiently subtitle it. Now, Google with Yahoo does this, but you can only put it on Yahoo, and it's really only in English.
Okay.
So
Sounds
what
like a
we
very
allow
useful
people to do
company.
is all languages, yeah, and especially in high noise environments. It's AI driven. The founders are extremely technical, masters from Chang, top Chinese university, and led a group of 40 engineers to build Sogo. Sogo is the leading search engine in China. Build their text input system, which became a very popular text input system for mobile phones. Back in the day, drove it from 0 to 300 million daily active users. So a highly technical team. But again, this is not just a China problem that they're solving. We believe that this is a global problem for both consumers and enterprises. So this is just one example of some amazing hardcore tech coming out of China that we think has applications in and out.
Okay, and what was your view of Singapore and Southeast Asia, the tech markets? Particularly as it compares to China. What was your view? Positive, negative, about the same, neutral? Because we're almost running out of time, so I have to
no problem
quickly.
So I think, we went pretty hard into Southeast Asia, but actually we've done 60 deals in India in the last 3 years. I think India has a massive, massive opportunity. We're looking at 2 areas. Enterprise software in India that's built for India first, initially test market, and then not necessarily sold to the US, but sold to other markets. And then most of our investments in India and Southeast Asia are actually consumer internet companies that serve the local market. And one of the biggest opportunities we believe in these markets is digitizing corner stores, digitizing mom and pop shops, digitizing like those people on the corner selling stuff on a card table or in a metal box with bars on it, right? Yeah. And they're also under pressure from e-commerce and from big internet. Food delivery companies screw over restaurants. They take between 15 and 27% of the money and user spend away from the restaurants, not including the delivery driver's fee. Right. And so we've done 17 investments in this space across Southeast Asia, South Asia, and now Middle East and Sub-Saharan Africa in order to help bring technology to these mom and pop shops to make them more competitive. I think that's a huge space. You've seen already some leaders backed by big global VCs like GGV, like Katabook and Udan. And we've done 17 investments in this space, obviously a little bit earlier stage. But we think that the next wave of sort of unicorns will come around. Bukalapak back in Indonesia did this as well. We think there's a huge opportunity in using technology to help this low income, middle income, sort of small business or mom and pop people make a better living and help the people in their community have a better lifestyle. Okay,
very good, William. We're going to have to leave it there. Really appreciate all your insights, and we'll have to have you back on the show.
Thank you so much. Thanks, Rebecca.
Yeah.
Thank you.
Okay. All right, we're moving right along now with our next part of the program. So we've had John and we've had William, and next we have our panel debate. Anson and team, Anson Bailey, Darren Young, Sandy Lau, Feng Han Luo. Are you ready?
Born ready, Rebecca. Born ready.
All ready? Okay, that's good. So
Team Hong Kong is here, Rebecca. Team Hong Kong is in place.
You need help there, Anson, do you?
yeah.
Bring it on, Darren Young. Bring it on.
Yeah. So Anson is in Hong Kong. Darren is in Singapore. They both work for the same firm, and they're partners at KPMG. Sandy Lau, the head of growth at the RAI. I hope I'm pronouncing that right. As part of HSBC. Feng Yan Lu is senior executive at a company that was acquired by Acadium, which is part of Temasek. And then finally, we have a venture partner from Hanaco Ventures and senior advisor from Brink, who are all going to be joining us. So I'm going to stop the share now and stop the share. It sounds like stop the vote. I don't know. Stop the share. Good. Let's kick this off. You know what? KPMG does an annual report every year. On tech innovation hubs, and surveying multinational executives around the world. And one of the really interesting parts of that report is your survey as your findings on the tech hubs. So I think it's 2 years in a row now, Singapore has led. And Hong Kong has been a little behind. So what's going on there?
Well, maybe
everyone,
I'll kick off, and I'm sure Anson will follow up. And I know we're and so first of all, thank you, Rebecca, for having us all. It's been a great pleasure, and I think also the prior speakers were really great and inspiring in terms of just the landscape that's changed. And perhaps for the audience, just a quick touch on what this report was. It was basically a research paper asking the question, outside of Silicon Valley, where are all the next tech hubs around the world? So it was a survey of around 500 people around the world. And interestingly, of the 10 cities that were mentioned, 6 were based in Asia. So more than half of them. And I think that really aligns to some of the comments that were said earlier. Yeah, unfortunately, Hong Kong crept in at number 9. And non-surprisingly, Singapore entered or remained at number 1. And so I think the context today was really, as we've heard from the speakers, that there is a huge amount of innovation. We've got some, obviously startups here from Hong Kong and Singapore to also share their experience and probably provide a bit of added light around, why is it that these cities are thriving and why there is so much innovation at a hyper-local level that we're seeing across Asia Pacific, both North Asia, I would say, and also Southeast Asia. Anson, you've disappeared. I guess that's just out of perhaps you not wanting to comment on this, but maybe you have a few words to say about why is it that Hong Kong is number 9, my friend?
Well, what can I say, Darren? What I would say, of course, is, again, a big thank you, Rebecca, for you to drive Silicon Dragon as you do. I think we heard some great insights there from John Chambers, as well as my old friend, William Baubeen. And, I think the key message, Darren, is we can be very adversarial, and obviously Hong Kong, in my mind, is always a lot better than Singapore. However, what I would say, Asia as the hub, and I think, as you said, Darren, what we have seen is the emergence of those cities across Asia. But I would also say that I think for China in particularly, there is that ingrained DNA. I think entrepreneurship is alive and kicking across the whole of China, as well as here in Hong Kong. And I was going to say, I'm joined by a very good friend of mine, Sandy Lau. And Sandy is the Chief Growth Officer for Sarai. So maybe, Darren, if it's okay with you, I'm going to ask Sandy to do a very quick intro of the super duper startup here in Hong Kong. And then, of course, we can go across to Feng to get his views as well. So Sandy, tell us a little bit more about Sarai.
Sure. First of all, Rebecca, thank you for having me on this panel. Very excited and keen to get into the discussions very soon. So Sarai is a startup set up by HSBC. We were set up in 2019, and we're an online B2B platform. And our whole mission is about simplifying global trade for businesses, whether they are big or small. Today, we have around over 16,000 buyers and suppliers across 10 countries on our platform, currently networking, finding new partners, trade partners, learning about their existing supply chain networks. And that's become even more robust actually with the onset of COVID because of some of the changes or forced changes in terms of changing the way they do their business. We also are building a supply chain solutions that actually helps to empower brands and manufacturers to make more data-driven risk management decisions, while they are promoting, of course, transparency and trust, because supply chain transparency is a very, very key concern and a priority for a lot of businesses, regardless of industry. So we're very excited, Sarai, to be based in Hong Kong. Of course, HSBC is this is one of our home markets, and we think Hong Kong has a lot of potential. And I think, as I echo what Anson said, it's about the whole region. Of course, there's a little bit of competition, but I think the competition is not between us. It's actually how do we actually collaborate as well as a bigger community.
Good point, Sandy. I think you nailed it. Feng, over to you, buddy.
Thanks everyone. Thanks Rebecca and for the panel for your time. So I co-founded Basis AI about 3 years ago with two co-founders of mine who spent most of their careers in Silicon Valley as data scientists at companies like Uber and Twitter. And when they decided to move back to Singapore, we built a company that is helping enterprises develop AI responsibly. So our mission was, 3 years ago, how do we build an operating system to build and deploy AI software in a safe, responsible, more transparent way? And when we raised our first round, which was the seed round, we were able to get Sequoia and Temasek as investors. The company was headquartered in Singapore. Recently we've been acquired by Icadium, which is part of the Temasek ecosystem. But I think it speaks to a couple of the ingredients as to why Singapore is I think an interesting place for kind of technology. You always talk about talent, capital, and obviously the market, right? And I think from a talent point of view, being a place that people want to live and work, I think is obviously exciting. We have, I speak to a lot of engineers who've done stints in Silicon Valley, who've done stints in China, who come from all over the world and they feel comfortable living in Singapore. And I think that's the first key to any business or any technology is all about talent, right? Whether that's marketing or engineering. A second bit is capital. Back in the day, obviously, there was a lot of interest in B2C type businesses, but we're a B2B business in something like AI and responsible AI, which for a lot of people is really far out, right? It's something that you're only going to see returns probably over a long-term horizon, and yet there's a kind of thriving VC and investor community, and I think increasingly investors who really understand the technology. That probably wasn't the case 4 or 5 years ago. As I speak to investors out in the valley and here, to be quite honest, the level of understanding of what AI really is, the kind of conversations you have are quite different, but I think that gap is closing. So that's the kind of capital. And the third piece is really around looking at the opportunity, and as Southeast Asia is starting to boom and grow, I think there's going to be a lot of more interest. Companies being a lot more progressive. CEOs really making AI top of mind. Technology is no longer something that you kind of delegate to somebody else, right? A lot of those technology decisions are made as part of the business, and then the very final ecosystem that's undergirding all this. As a founder, you really don't want to worry about safety. You don't really want to worry about COVID disruptions. You don't want to worry about how the ease of starting a business. So just having that consistency that John Chambers was talking about, that stability, just helps you focus on what you really need to focus on. So that governance, that safety, that security, that predictability is, I think, what undergirds this talent, this capital, and this opportunity, because that powers everything that needs to be ingredient. So I'll stop there.
No, that was great. I mean, that's a good summary because, as I was going down the criteria that they use to judge all these cities, talent and funding and the ecosystem and the urban environment and whether it's a cluster, whether it's a university nearby, what the network is like. So you really touched on a lot of those things. And it seemed like I was almost won over by you there. But then, I mean, what is Hong Kong? Where's Hong Kong's place in this, Anson? And yeah.
Rebecca, absolutely, and that is that's a very good question. I think Hong Kong equally, and Feng, you made very good points, but I was going to say equally, we see the same things in Hong Kong. I would say we see a young professional network here in Hong Kong. As I mentioned, I think DNA is very important, Rebecca, and I've worked around the Asia Pacific region for the last 30 years. So I've worked in China, and I've worked across Southeast Asia as well. But I would say that I continue to see that entrepreneurship and that DNA here in Hong Kong. I also think that we do see a lot of corporates now, like HSBC, for example. I think that's a good example where we do see a lot of the corporates now that are bankrolling the next generation of startups, Rebecca. I think there is also talent, absolutely, as I think as Feng mentioned there, that there is talent. There's certainly talent in Hong Kong as well as talent in Singapore. One of the challenges, of course, is, do we have enough of that talent? Equally, the universities, we do see that network of top universities. And again, if I'm not mistaken, those Hong Kong universities continue to be right up there in the top 50, top 100 universities around the world. Equally, Rebecca, I think, as we all know, Hong Kong has always, I think, offered very generous tax and government incentives as well. As we speak, I think there are somewhere in the region of 50 different funds that are supporting that startup ecosystem, here in Hong Kong as well. So I think you've got the ingredients, Rebecca. I've always been very much a supporter of Hong Kong. I continue to be a supporter of the Hong Kong ecosystem. And Rebecca, you and I have been sitting on the same panels over the last several years at places like Cyberport. In the old days, there weren't so many startups, but if you look at Cyberport today, they're in the region of around 1,600 plus startups. So again, there is that vibrant ecosystem that I was talking about. And I think one of the good things for Hong Kong is, yes, we can pivot to the mainland, but equally, we can pivot to Southeast Asia. As Sandy says, her network of 16,000 factories and different players are not just in mainland China. Large percentage of them are in South Asia and Southeast Asia, right?
Correct. Actually, in Southeast Asia, and I think that's why Hong Kong is a very strategic location for us, Sarai. We are looking at bordering the supply chain ecosystem, and that definitely is not only China. China definitely strategic, and we are connected to China, Greater Bay Area. That is a huge benefit for Hong Kong startups, but we are also not that far from Southeast Asia, and we plug into the networks, border networks there, to really harness that and bring that together. So the access to markets, different markets and international markets, is a very big plus for Hong Kong.
So what's the mood like in Singapore? What's the mood like in Hong Kong now? Because, from the US perspective, we get a kind of a different news story coming out of some of these places. What's the mood like there? Darren or Anson or Feng Yuan, whoever wants to chip in here. I guess I'm also trying to get a little bit at the, the geopolitical issues that we hear about every day.
Yeah, Rebecca, maybe I can kick things off. Geopolitics is now at the top of most board agendas. I personally would say that media are a force for good, but equally, I've also seen, quite frankly, some bad reporting as well. So, the reality is that it's not all gloom and doom. And quite frankly, I have no plans to relocate to Manchester anytime soon, Rebecca.
I see. Okay.
Rebecca, from my point of view, I think, and Feng, it'd be like to hear your point of view too, but I think, Singapore as a government, and I'm sure other nations are seeing digital as a long-term strategy for many. It is a source of perhaps GDP growth with new technologies continuing to emerge, be it 5G, IoT, AI, all those areas. The ability to have a nation that is familiar with technology, knowing how to use it, and most importantly, because of the low barrier to enter any market through an app. it just yields so many different ways of engaging through the region. So my take on it is, sure, the current situation and environment has really, of course, great opportunity for double down, particularly with the challenges that we're seeing in other, say, Hong Kong and the challenges there. But I think long term, we are probably going to continue to see some kind of level of hubs and the ability for the government to really capitalize on that.
Right.
I think you were going to say something, I think. Did you have any other views from your point of view, being a startup?
Yeah, I mean, I think for us, it's just to a certain extent, I mean, geopolitics is always present, but out of Singapore, it never was something that was top of mind. You know, we kind of took it for granted that it's a kind of pretty stable environment. Obviously, COVID was a big hit, so there's been kind of ups and downs in managing that. But I think the mood is getting pretty optimistic, and you know, things opening up, people being to travel kind of cautiously optimistic. So that's how I would describe the mood. And I think Darren is spot on, right? You need to have that stability so you can look at the long term, right? As a startup, you're trying to look 8 years out, and you want in the intervening years, anything can trip you up. And so I think that that stability is super important.
Right. So Matan, you've actually advised a number of startups on their strategy, and I'm sure their location as well. Do you see any main differences between Singapore and Hong Kong for startups? And we have about a few minutes left. So please, Matan, do you see any main differences between Hong Kong and Singapore for startups?
I think Singapore as government has just made their environment much more welcoming for more overseas startups to come to their location. I think for IoT and fintech, Hong Kong has a very important role and has been very successful in that respect. But in more frontier areas, blockchain, food tech, and others, I think Singapore has been more successful. And I think that they've just really done a much more policy-heavy approach, whereas I think the successes of Hong Kong have been a little bit more serendipitous.
Okay, anyone care to debate any of Matan's points?
Again, I think Matan's made a good point as well, Rebecca. I think Hong Kong has always been very, very strong in fintech. It will always be, I think, very strong in the fintech arena. And as Matan said, in the IoT ecosystem, when you've got, Shenzhen, right, the Valley of the East, when you've got places like Shenzhen, IoT and the innovation side of things and tech and electronics is booming. Again, I think Singapore have done a good job in terms of welcoming the startup ecosystem. But equally, I would say in Hong Kong, it's not a bad place to be. The ecosystem, I would say, is booming. If you look at the number of startups, Rebecca, when you started talking about Silicon Dragon, just all you've got to do is look at the number of startups. And Chris made a great point. And Chris, I was also going to come round to the fact that, we have got the likes of the Hong Kong Stock Exchange. That is a pretty vibrant marketplace.
Sure.
We see family offices that are raising or helping to support those ecosystems. So I actually see more money being available. And in fact, John said that as well. He said there's a lot of cash around like never before. Sure. And if you want to raise money, I think Hong Kong is still a great location. And equally, if you want to exit, then I think Hong Kong is also a great location as well. And Rebecca, last week I was with our good friend, Mr. Danny Yeung from Prenetics.
Oh,
and I'm sure you heard the news that he's teamed up with Adrian Chang with the SPAC and, valuation of about 1.7 billion US dollars. That's not in fintech or IoT. That's in the life sciences. That's in the biotech.
Sure.
So again, I think there's something for everybody here in Hong Kong, and I'd encourage all of the startups to come here.
So we are going to be starting to see more SPACs coming out of Hong Kong, from what I understand. Maybe next year. But anyhow, from a U.S. perspective, just looking at your rankings, I was interested to note that Austin and Seattle have moved way up. And so things are changing pretty rapidly here in Silicon Valley as Silicon Valley decentralizes. Yeah, that's a rapid movement here. So anyhow, for startups trying to figure out where to locate, yeah, I guess they know where to turn, right? Anson and Darren. Okay, well, thank you so much.
Call me first, Rebecca.
Oh,
Don't call Darren. Call me first.
Well, you two are not going to fight it out, or are you going to fight it out?
Just show them the list. Just show them the list, Rebecca.
I always beat Darren. Rebecca always beats him.
Okay. A before D. Okay.
Yeah,
well,
Grady Lamb, Hong Kong is better. Absolutely agree, Grady. Absolutely
yes,
agree.
a lot of good comments coming in. Thank you so much for your comments too. So we do have to move on now to our pitches. We have a number of startups. We already mentioned Cyberport, right? And I was just at the moderating a session yesterday at the Cyberport Venture Capital Forum. So I think maybe some of you saw me there too. This is my nighttime activities here from Silicon Valley to be on Zoom with Hong Kong. So here we go again. So now we are going to do our pitches, and just give me a second to share the screen so we know exactly who's on next. So first we're going to have Calvin Chang, who's the founder and CEO of Wizpresso. So each of the entrepreneurs are going to get 3 minutes, and then we have about a minute or so to any kind of follow-up, and then we're going to move on to the next one and so forth. So let me stop the share. Calvin, it's all yours.
All right, thank you so much for having me. So I'm Calvin, I'm the founder and CEO of Wizpresso, and Wizpresso symbolizes wisdom as condensed as an espresso that can be consumed daily. So we don't sell coffee. We're founded in 2017, and we're a Hong Kong-based R&D company that specializes in developing natural language processing and AI solutions for capital markets. So we have around 30 people, and more than 75% of us are engineers and data science. But I came from a banking background. I have a very strong passion in AI, technology, and entrepreneurship. So I worked in banking for a few years and found that most of the financial models the investors look at are quantitative data, but in fact, more than 90% of the data is qualitative and unstructured. So that's why I founded this startup to tackle these challenges within the NLP space. So the pain point we're trying to address here in Hong Kong as a leading capital markets, as some of the panelists pointed out, we actually have most IPOs and most funds raised in the past few years around the world. But the IPO process in Hong Kong is actually quite costly and time consuming. And it involves many, many parties like legal advisors, sponsors, issuers, auditors, and the list goes on. And these costs can easily compound as more parties are involved in these transactions. So our goal is to really augment the capital markets workflow through technology and empower stakeholders by removing the communication barriers. We do this through our suite of SaaS platforms that empower sponsors, issuers, lawyers in the IPO due diligence and research process. We believe the due diligence market to be well over 200 billion globally, covering legal, financial, and business due diligence, along with market research. So by combining our big data capability with workflow automation, we're very well positioned to penetrate this market and better serve the professional services industry. Now, historically in Hong Kong, I think one of the biggest challenge was adoption and infrastructure, and that includes the ecosystem. But with the Hong Kong Monetary Authority's letter a few months ago on FinTech 2025, we see all the banks and law firms having built a great digital team and also really taking a much more proactive stance towards adopting RegTech and FinTech as well. So I think we're in a very healthy position. We're quite self-funded and cash flow positive, with only raised around $1 million USD from sort of friends and family, early stage VC and angels. but we are looking to do a pre-A targeting mid-2022. So I guess that's sort of my very quick 3-minute summary. Maybe I'll just open up the floor for questions.
Good. Anyone have any questions for Calvin? If not, we'll move on to the next one. Let's wait a moment to see if anyone has a question that they want to type in there. Okay, let's move along. So Peng Shu, founder and CEO of 3MindWave. All right. So Calvin, actually, anyone who has questions will come back to you at the end. So just sit tight if you think of a question you want to ask Calvin. But anyhow, Peng Shu, take it away, please.
Hi, good morning from Hong Kong. This is Peng, CEO of 3MindWave. We established in 2017 with around 20+ staff. We focus on developing games for amusement. We have a dev team in Hong Kong and a sport production in China. I graduated as a programmer in UK. Then I moved to Japan for 5 years. After that, I moved to Hong Kong, worked for a Chinese company called Wildlife Technology, which recently got listed in Shenzhen. 3MindWave are self-funded through our funders. I'm a producer, producing all our major games, including racing and shooting. Some of the games are OEM through Sega. Our games gain more income than many well-known IPs in locations, such as Mario Kart, Daytona, Walking Dead, Transformer. The key of our success is to ensure that our game is easy to play, challenging to master. Making the best game for our community has always been our DNA. Pandemic has hit us hard, but luckily that we recover rapidly. When there's a world with low lockdown, we got orders from those regions. We are currently busy scheduling for delivery until mid-2022. I'm a dreamer with a long-term goal to expand our gaming community. In the near future, we'll be developing a brand new esports platform, focusing on location-based, open business model, a VR-ready esports platform. We call that the Love, L-O-V-E, the Love platform. We believe the platform will generate countless of reward for the players, just like how Uber offering opportunities to regular drivers. This platform connects esports hosts, the player, marketing planner, the most efficient way that it possibly can. It will be game changer. Our distributor love the Love idea. In our industry, a typical good game can distribute over 5,000 units around the world. And if you imagine, each machine can generate $5 a day, we can generate over $45 million just for one game without any advertisement. We are targeted to raise $10 million to develop this Love platform, plus a secured hit title. We're currently in talk with listed company in the industry. This platform will connect tens of thousands of machines around the world with 100% pay to join business model. And we all know this is not limited in the amusement market. Love is going to be extraordinary. And I'm Peng from 3MindWave. Thank you.
Okay, good. Two very good pitches. And I have to say, this is not easy because they're not using slides. I told them they cannot use slides. We want to see who they are. And that will let us know a little bit more about their company. So I think they did a great job. And so our final pitcher is here. Lou, are you there? From Ubi Blockchain. Okay, here we go.
Hi, thank you, Rebecca. Good morning, everyone. My name is Mu Liu, and I am the CEO of UBI. A little bit about myself. I've been living and working in the UK for the past 20 years. And my passion is in the application of technology in traditional industries. And I'm deeply fascinated about empowering industries with the state-of-art technologies. And why is that? The art and antique trading in China alone has a potential market size of $1 trillion. And online trading is merely 1% of that. Annual growth, however, is 90%, and with a user of over 200 million and growing fast. And we believe this is the market. It will give birth to unicorns. Why we are aiming at this industry? First of all, the existing and the potential market is huge and is fast growing, yet it still remains in the era of Wild West. For example, a company growing from 0 to over 43 billion in RMB in only 4 years. And this is the actual story happening in this market. Secondly, the key issues like counterfeiting, valuation, credibility troubles the industry and its clients for a very, very long time. And our goal is to solve these issues and win the market. And thirdly, our company UBI, together with Hong Kong Polytechnic University, we developed the blockchain plus technology, and it is a workable solution for solving the industry issues. We're not saying it solves all, but solves a good percentage of the industry issues. And based on this technology, UBI builds the ArtMax trading platform. It has a 5-step examination and authentication guarantee at its core. And it combines trading, auctioning, pawning, and bartering all in one place. It innovates dealing models, and it also helps elevate liquidity. And fourthly, we are very fortunate to have a management team and a tech team with very strong track records. Our founding team consists of successful entrepreneurs who have founded an NYSE listed company, and influential individuals like the member of Rockefeller family, Sullivan family, and also our tech team includes former senior tech leaders from Huawei, ZTE, Hong Kong University, and Berkeley. So really what we are asking for. UBI was founded in 2016. So for the past 5 years, we have been self-invested over $20 million to get us here today. And we have reached a breakthrough point, really. So for that, and with our revenue forecast for the next 3 years, 300 million, 700 million, and 17 billion US dollar respectively, we are asking up to $16 million US dollar investment and willing to give 5% of company share. And we are planning to go IPO. We are planning to IPO in Hong Kong or in US in 3 years. So thank you for having me, and please do not hesitate to raise any questions.
Oh, sure. Okay, so any of the investors who are out there, if you're interested in contacting them, just please write me, okay? And I'll get you connected to them. You can write me at news@Silicon Dragon Ventures, and I'll get you connected to them so you can get their slides. I think they did an excellent job. It's very hard to talk 3 minutes straight like that and cover all the points that they did about their respective companies. So congratulations, guys and lady. It's wonderful to have a lady entrepreneur here too. Any questions before we move on, because we have one last little tour to do, which is our poll. It's really a fun part of our show. It's our poll right before we close. Any questions at all? Okay, so you know how to contact them. You just contact me at news@silicondragonventures.com, and I'll get you connected. Again, great job, really great job. I thought it was excellent. So, okay, let's move along. We're going to do our poll now. Now, some of you who have been with us for several programs know about our poll. It's totally anonymous and it's just fun. So we have about 5 questions, and each one of you can answer online and mark your choice. So one of the questions is, what is the best Asian tech hub? Now, some of you in the US may not have such a strong opinion, but I think some of you in Asia will have a strong opinion, and anyone can mark their answer here. The choices are Singapore, Hong Kong, Shanghai are the top 3 choices. Those are the ones that are trending to the top. Singapore and Hong Kong are about even right now. Beijing just got a vote. Okay, moving on to the next one. Oh, wow, okay. Hong Kong is edging out Singapore right now as the best Asian tech hub. I'm going to share these in a moment, but okay. What is the best US tech hub? Silicon Valley, New York, or Austin, or Boston, or Miami? Okay, 7 out of, okay, 70% say Silicon Valley. So Silicon Valley is still winning on this score. New York is second. So a couple people mentioned Austin, but nobody mentioned Boston. And nobody mentioned Miami, although Miami is supposed to be picking up. Okay, VC invest in China or not now? Okay, 60% of you said yes. 7% said no, and maybe is 1/3. So the yeses win about VC investing in China now. That's interesting. Best exchange for tech IPOs, NASDAQ, NYSE, Hong Kong Stock Exchange, or something other like London or Singapore. Okay, well, not too surprising there. NASDAQ won 58%. Okay, your view of Facebook's name change to Meta. Are you positive about it, negative, or you just don't really care? It's neutral. Okay, half and half, positive and neutral. Negative, not too many people were negative, only 20%. So that's pretty interesting. We just like doing this. It's just for fun. Don't worry about your answer. Just try to be truthful, that's all. Okay, so just recapping, Hong Kong won on the best Asian tech hub. Silicon Valley won on the best US tech hub. VC investing in China, yes, won over no. NASDAQ won hands down, its best stock exchange. And it's about even on whether it's positive or kind of neutral about Facebook's name change. So thank you all for voting. Hong Kong Stock Exchange just gained a few more votes there. So I know we have some Hong Kong loyalists in the audience. So thank you all for participating, and we'll share the results out a little later. So now what I would like to do is just move along with our program of what we have coming up. And if you like today's program, then you can join us for our Ask a VC series. So we have that almost weekly. The next one is November 10 at 2 p.m. Sorry, it's a little bit early for those in Asia. We usually do it a little bit later, but Yanif is in New York, and we, sometimes we have to honor their time zone. So, okay, then we have Andrew Chung from 1955 Capital. He used to be with working with Vinod Khosla. He's very senior venture capitalist, and set up 1955 Capital a couple years ago. Has been going very strong. So he's going to be on November 18 at 4 p.m. Pacific time. And by then we're going to have the time change. So that's going to be 8 a.m. your time. You can just tune in if you have spoken on the program or you want to sign in. Just let me know. You can find all of these events on our website, Silicon Dragon Ventures. Finally, we have our CES show, Consumer Electronics Show in Vegas. Now that's going to be January 6th at 2022. And it's going to be virtual again because in 2021 we did it virtually and it worked out really well because we got a global audience for that. And I'm going to be sharing the program lineup soon, but it's going to be great with MNCs, multinational corporations, and startups and high growth companies and venture capitalists. Okay, now finally, a number of you are already Silicon Dragon Circle members. I encourage you to sign up. And if you do now, you'll get all of our 2022 events complimentary, and the rest of the ones for this year too. So finally, a word of thanks for everyone for joining us. Thank you for listening in. Thank you, Cyberport, for being a partner and alliance. KPMG for your continued support and participation. You make it fun. Invest Hong Kong, thank you for your series support as well. And I'm going to be signing off now, and I hope that you enjoy the rest of your day. And we hope to see you back on a future program. So good night or good morning, whichever time zone you're in, and take care, everyone. Bye
Thank
now.
you, Rebecca. Thank you.
You're welcome.
Thanks, Rebecca. Have a
You're
great
welcome.
day.
Thank you, everyone. Bye now.
Bye.
Bye-bye.